in a. I do believe that this is one of the nice instruments that we should learn about it, and after learning about it and continue practicing about this. So even myself also, I'm still practicing about the indicators. I'm still researching about the indicators, because I can see it's one of the very, very nice tools to be able to use it in a market. So we're going to go through into the indicators, the ones that they're actually popular. I know maybe there might be people that they know already about the indicator. You're most welcome to actually, whether comment or says anything that you want to say at any given time. So in terms of the indicator, after go through, maybe if we have time, we can also look at them, practically on a chart, so that we can see if these indicators, they're actually what we're talking about, they are there on a chart, so that we can be able to implement it, whenever we need it. All right. So anyone who ever used the indicator in this group? Is there anyone who ever used the Forex indicator when they're trading? All right, Sise, which indicator did you use? Okay, Tepo, which one are you using? RSI. All right. That's good. So you're gonna put the impacts when we're talking about RSI. Okay, Tepo, which one are we checking at the moment? Okay, cool. All right. No, man. 100%. I understand. All right. So when it comes to the Forex indicator, these are indicators are actually used to make up to the expectations of the investors and the traders. These Forex indicators are generally used to focus and predict the rate and the market price of the shares and investment that have been made within these markets, right? You also need to know that this Forex analysis or these technical indicators are generally for predict the market price and all those changes that are actually associated with it. So pretty much they are all about the market price, the predicting to the market price, predicting to the next move where the market is gonna, go or it's gonna do. So that's basically what the indicators they are there for, to actually predict what exactly is gonna happen after, and which is what we want. Everyone, when you're trading, you are actually predicting the next move of the instrument, the next move of what the market will be doing. So that's what we basically, mostly do. Okay. So why to use the Forex scalping indicators, for example? There's the indicators that can help you to, to identify the scalping position or scalping opportunities. So using the Forex indicators can benefit the traders and investors in a plenty of ways in the various tools. Forex indicators also have some of the major components and aspects that are entirely associated with. It can be pretty tricky at the same time because of it's something that we need to learn and you need to practice over and over again. And it can be also tight for the investors and the traders to choose the indicator that they need to use at a specific time. So of course, the traders prefer using the single indicators, which is what we are supposed to be focusing. Using a one indicator at a time, it's much more better until you understand all those Forex indicators. So using a single indicator will help you to decide upon the time frame, while using the multiple signal can confuse most of the investors when they are trading. All right. So I'm sure we know the Fibonacci extension. I think Sisley is the one who said that he traded with the Fibonacci. So the Fibonacci extensions are tools used by the traders which help them to determine the profit target, right? So it has a percentage and it actually determines which percentage it gets and how much profit target would be making to that percentage. With me? So these tools enables the traders to identify how far the price may go before pulling back or finish. So in that case, you can say that, okay, my trade is that at this position, I'm making this amount of money. The possibility of returning this trade to return or to retrace, it has to get maybe, for example, to 61%. So 61% is here. That means I'm gonna have to wait for the trade to push all the way up to that level of 61. Then you are actually comfortably to say that, let me leave the trade to get to that position. You can even put maybe a take profit at that position, which is that works to your advantage. When it get to that level, then it touches your take profit. You take the profit, it's in your bank. The extension levels are periods where the chances are that the price may reverse. So those extension level, those percentage level that we're gonna see, they are actually periods where the chances are the price may reverse. So if you take it from 10 Rand and another extension percentage, it shows on a 61. So you already know that you have time to hold this trade until it get to the 61. When you get to 61, it's your choice to close it, or maybe you wait for the confirmation candlestick and continue with your trade. So basically what it does sometimes, when it get to that constantion level, it reverse. After reversing, maybe shoot up again. If it was going other way around, it get to this level, reverse up and continue, goes down. So the common Fibonacci extension level that we normally can see, it's a 61.8%. There's 100%, 161%, 200%, and 261%. We'll see these things when it comes to the chart and how we can actually, arrange this Fibonacci. So the process of drawing the Fibonacci extension during the bullish period is, first of all, you recognize the swing high point, mark number 1, right? So you recognize the highest point level of that chart. So now, in order you to recognize or to see the highest level point, what time frame do you think you can use? Anyone? Is there anyone who knows if you want to see the highest level of the trade, what type of a time frame should be used on a trade? All right, you can put it on a chart, or you can unmute, but it's fine. Gonna continue. So the most important time frame, or the only time frame that can be able to give you an eye of the highest level of the trade where it's been, it's the highest time frame. So depending whether you are a daily trader or you are a long trader. So if you are a daily trader, that means you're going to look into 2 types of time frame, between the day 1 or H4. When you're saying H4, it means you can be able to hold the trades for a period of 4 hours, right? You can be able to hold the trade for the whole period of 4 hours being in a game. So you can check on H4 as a day trader, and or you can check as on a day 1 as a day trader. So first of all, you put a time frame, your time frame on an H4, or maybe on a day 1 sharp. So now, once we put that, we're going to see now the highest level in a daily trade, or in a daily range, if I may put it like that. Second, you recognize the swing lower points. Again, the swing lower points, mark number 2, you can only identify it by going to the bigger time frame. What do we say? You put the trades, the chart trade on the highest, bigger time frame so that you can see the highest, and you're going to see also the lowest at the same time. You're going to see the highest, you see the lowest at the same time. So you can now identify, even put the line to say that this is the highest of the trade. Then you put the line under there, this is the lowest of the trade. Then connect both 1 and 2. So now you have to connect upper to down. Choose a profit level. So when you go, you click Fibonacci, you click from the highest, you put the strings all the way to the lowest. Now you can see the percentage. The Fibonacci process stretches itself, gives the percentage in that chart. Okay, something like this. So you can see it's a bullish trend, goes all the way up. This is the lowest. This is the highest. They put they put it on a bigger time frame. Maybe we can see the time frame, what type of a time frame it was, but we're gonna go on a chart, we'll be able to check it properly. So they put a string of Fibonacci from here, pull all the way to the highest. Immediately after they pull that, these percentage levels, they pop up. So it's like you are stretching this thing that has a line. So you are stretching it. Now, after you are stretching it, it shows the percentage levels. So if you can see 38.20%, the market resisted this position, right? So if you had a trade at this level and the trade is going all the way up, the only point that you're going to be worrying is the point of 38.20%, which is this. So you can relax. You can say that, let me leave the trade, let me relax. Definitely whatever I do, it will go all the way to 38% before it decides. So you look at it, get to the 61%, still it goes up. Continue goes up. Even if it tried to form another candlestick, but it was not getting to this level of 61. If you look at it at this, it didn't get to this level of 61, continues, pulls up until it get to the level of 1.00, which is 100 level, break even. That's where it drops to the, and look at it, it turns again at a percentage level, goes up, breaks at the percentage level. So that's how the Fibonacci works. So it's suppose that you took a buy on this chart, the one that we just see, a Fibonacci retracement level, then you have to look for potential profit targets where the price would likely reach and reverse from. The Fibonacci extension tools allows you as a different extension levels as a possible target level whenever you trade with the Fibonacci tool. There is a the vast array of the trading codes available that we can be able to see it online. So you might find also another Fibonacci. That one, it was Fibonacci extensions. This one, it's a Fibonacci retracement, right? A Fibonacci retracement. So the Fibonacci retracement, again, are tools used by the Forex traders to determine the possible levels of the support and the resistance. So this is you just determining the levels of support and your resistance level. These levels of support and the resistance helps the traders find the entry or the exit points of the market, right? So once you know the support and the resistance, then you know where to enter and where you can be able to exit. That's the most important about support and the resistance level. The process of implementing the Fibonacci retracements includes identifying the significant move, whether it's up or down, which is identifying the trend, whether it's a downtrend, whether it's an upper trend. Draw the Fibonacci connection, the highs and the lowers for bear trend from the higher point to the lower point. Then choose possible retracement level, same thing, trend, draw the line all the way to this level, right? So you look at on a bigger time frame, check the trend, put the string, pull it all the way to level. It will show you the percentage. It will show you where support and the resistance can be. So again, the importance of it, so you can identify the target. Another importance, it can help you to identify the support and the resistance easily. All right. So these are upper trend and the downtrend. I'm sure we know about those ones. So another indicator, or maybe before we jump to another indicator, let's just check what are these Fibonacci thing that we're talking about. Okay, so first of all, as I said, we should look at in a higher possible time frame, a daily or maybe a 4 hour, right? So again, you can see on a 4 hour, because if you go on a 15 minutes, you will think this is the highest and this is the lowest. But to find out, this is very, very small movement, right? A very small movement. If you go again on a 5 minutes, you think this is the highest and this is the lowest. To prove that, if you see like this, right? Then you go on a 1 hour, look at it. The highest now is actually on top. The lowest is still there. If you go to H4, you're only focusing at this level. So it's most important to look at a high time frame so that it can guide you to see the highest and the lowest. So let's say, assume we're taking the 4 hour, right? So we go on insert, says indicator, right? Fibonacci retracement, right? You can see here's Fibonacci expansion, here's Fibonacci retracement. So click on the Fibonacci retracement. So here's the highest. We put there, pull the line to the lowest. Done. So now you can see 0%, 23%, 38%. You can see where it was, play around and turning the market. 50%, the same thing, where it's been play around and turn. 61%, the same thing, then the highest. So it actually helps you that the market actually, right now, the market actually, get to the bottom of this level, right? So you can see even on a 30 minutes, it's failing to break at this level. So Fibonacci 0.0 confirms that it's failing to break on a GBP USD. So it's trying now to pull the market all the way up. Now, assuming that, let's say it's pulling the market all the way up, knowing that the next possible position to take, it might be this one. So you can put your take profit here, put another take profit on top. If you go back maybe to you can see where you can put your take profits and so on and so forth, including the stop loss. You can be able to move the stop loss based on the Fibonacci retracement. Instead of you doing the support and the resistance, drawing the lines and so on and so forth, you can just use the Fibonacci retracement to actually, retrace your support and the resistance. Very easy like that. Any questions? Any questions so far? All right, if there will be any question, please don't forget, you can send it on a chat box there. Okay. All right, so now we're looking into the RSI, the Relative Strength Index, the RSI, Relative Strength Index. It's one of the indicators that you can find also in a market. You can be able to use it as long as you're familiar with it. You can continue, practicing with it over and over again. The RSI indicator is a technical trading tool that is considered as a leading best Forex indicators. That means a lot of people like this indicator. Now, here's the key point at that first statement. It is a technical trading tool. It's a technical trade, so it works with the technical analysis. If you try, if there will be any fundamentals happening, and eventually you are using this RSI, sometimes you find out it's not going to work because there's a news event that will spikes the market and goes all the way higher or all the way lower. So it is a technical indicator that you can use technically, but always check your fundamentals. So this means that it gives out the signal before a price event. That the RSI measures the ratio of up moves to down moves and gives out the reading within the range of 0.100. Here you can read a lot of thing on the internet. The relative strength index consists of the single line with it fluctuates between 0 to 100. So that's what the line fluctuates from 0 to 100. The index areas is separated into 3 areas: 0 to 30 oversold area, 30 to 70 neutral area, 70 to 100 overbought area. So if you see the area, let's say for example 0 to 30, definitely if that line touches that 0 to 30 indication, that's where you know that okay, this instrument, it looks like it oversold. They sell it a lot, right? Now the rules on Forex is that anything that is oversold, it has to turn, right? So already indication gives you that, okay, if it touches here and it shows that it's oversold, that means there's a reversal of this trade. So let me wait until the trade is reversing, and then I can get into that trade and continue with it. Same as the overbought. So you can also identify that, oh, okay, this trade is actually overbought at this particular time, but looking at 70 to 100 ratio. The RSI lines moves around these areas, gives the different signals on that chart according to which traders act. The RSI line helps traders identify ongoing trade and when the market is overbought or oversold. The trader is then able to determine the best price to enter or exit the Forex market. Remember, guys, the most important in a market is the entry point. Anyone can trade. Anyone can click a buy. Anyone can click a sell. But if you don't know where you click the buy or sell, eventually what will happen? You end up, clicking while the market goes in a different direction or different route, right? So important is when to enter, most important. Second important is when to exit. All right, so furthermore, the RSI also allows the trader to identify that which trading time frame is most active. RSI is also a brilliant and accurate tools used by the Forex traders. It is the most amongst the best Forex indicators at the moment. All right, so this one is another one, is called Bollinger Bands, but let's look at the RSI at the moment. Let's see what RSI is. So we go to the same chart. Insert indicators. Now we gotta look at this indicator. So remember, it tells us that this indicator, it's actually identify the trend mostly, because it only identifies if it is overbought or it oversold. So where should I look? I have to look on the trend indicators. Look on the trend. Where is the RSI? Oscillating average true. Okay, relative strength index. So we got it. It's under oscillators indicator. So you click on it. You can change the color. You don't want the blue. You can change the size of the line. You want a different size. Fixed maximum 100. You click on. Now it's on. So you can see this is the line that we're talking about. This is the numbers that we're talking about. 0, 30, 70, 100, right? So if the market is on 30 to 100 ratio, it's oversold, right? If the market is on 70 to 100 ratio, it's overbought. So if you see this line, simple thing, get to this level, you see it's on a 30 to 100. That means you can see that, okay, this market actually right now, it's oversold, this thing. The Great British Pounds right now, it's oversold. So this is the time where you can even be, maybe just let it to get into the line to get to 30% to 30. Once it get to 30, like the way it did here, get to 30, shoot up, right? Every time it get to 30, it actually have the crazy momentum of going up. So you can just wait it until it get to 30, and then you know that this is a strong buy. Once it get to 70 again, you must always know that it's oversold. So it's something that, you know, if you don't know where you can be able to enter the market, you can just look at these numbers, man. 0, 30, 70, 100, simple like that. Look at this line, get to here, you buy. You see the line, it goes all the way to this side. Maybe you didn't buy at that particular time. If you get to this side, you sell. It means it's overbought. You sell it. It will do exactly the same thing that you are doing. But remember, these indicators, they don't respect the fundamentals analysis. So if there will be any type of fundamental, it might shows like it's overbought, getting to the overbought like this, because it's below 30, it's oversold. But if there will be a news of British pounds and United States, or maybe a dollar news, and the dollar news shows positivity, it can continue dropping. So the price can continue, you know, all the way dropping. So you see it continue selling all the way. Any questions for RSI? We're good on RSI, right? Yes, Mr. Robin.
Hello?
Yes, Mr. Robin. Yeah, we can hear you.
Okay, fine. I wanted to ask, whenever the RSI is on the 30,
Yeah.
Whenever it is on 30, does it guarantee that maybe it is going up, or maybe there are other parameters that we can look into? I've just joined the meeting just recently.
All right. Okay, cool. So let me do this. Let me get here. Okay. So the relative strength index consists of single line. It has a single line which fluctuates between 0 to 100. The index area is separated into 3 areas. There's 3 areas in the index area. So from 0 to 30, right? If you see the line, it goes from 0 to 30. It's oversold. It's been oversold a lot. Actually, so the rules in the market, any instrument that is being oversold, it has to go up. Anything that has been oversold, it has to, you know, the price has to now getting momentum and go higher and higher. 30 to 70 level, it's a neutral area. That means it's not oversold or overbought. It's just on a neutral. If you see the line, it's playing around on a 70 to 100, it actually means it's overbought, right? Actually means it has overbought. All right. So if we go let's say we go on a chart. Here we go. So it's 0, 30, 70, 100. So it said from 0 to 30. This area, if the market is playing around in this area, you must always know that it's oversold a lot. It's been oversold a lot, like how it is right now. It's been oversold a lot. We're just waiting for, the momentum or confirmation when it get to the 30. Once it get to the 30 level, it's a confirmation that it's moving from the level of oversold to go to neutral, which is 30 to 70. This is the neutral area zone, right? That means the trade is not oversold, not overbought. You don't expect anything here. You can just, maybe if you're a swing trader, you go with it up, go with it down, you go with it up, you go with it down with the trade, because it's not showing any indication of overbought or oversold. Now, when it get move all the way, getting to this level from 70 to 100, right? 70 to 100, that is overbought. When it overbought, again, the rules are saying once it overbought, anytime it can actually tend, to go to, tend to go to drop the price. So let me just go maybe on a little bit bigger time frame. I want to see if this GBP USD once overbought, or it's been a sold trade. G. So a British pounds against the dollar, it hasn't been doing really good in past years. It hasn't been doing any good. You can see this is recently the oversold, like July 2016. That's why the economy of that side, it's really bad. This thing happened, it actually happened 2016. That was long ago when it was sold. And now, it's been playing around for all these years in a very neutral place where it's balancing between between a pound to a dollar. So it was nice. It never been in a level of maybe oversold or overbought. So let's see if we can find this thing on let's say if we can find this thing on a Nasdaq. Because obviously Nasdaq it's one of the highest volatility instruments. It can be able to overbought and oversold at any time. Ladies and gentlemen, in a minute, it's gonna cut. Please just click rejoin again. They only give me a few minutes. So now I'm already, out of 40 minutes that they give me. We have to restart again the Zoom. So please join again so that we can finish up. But I just wanted to check on the Nasdaq. If we go on the indicators and we go on the oscillator, we go on a relative strength. Here we go. Yeah, you see on the Nasdaq, it shows now that there was a certain time that was overbought, September, 12th of September. If we go on a maybe a bigger time frame, shows 13/20/20, it was also overbought. Again, 15 July 2021, it was overbought. It hasn't been